If you're looking for a prop firm focused on futures trading, there's a good chance you've already heard of Apex Trader Funding. But the important questions are, how does Apex actually work? How difficult is it to pass an evaluation? How does the drawdown rule work? And most importantly, what are the payout requirements after you pass the evaluation? In this video, I'll walk you through everything step by step, including how Apex works, the available account types, trading platforms, evaluation rules, performance accounts, and the main advantages and disadvantages you should know before signing up. This is not financial advice. Futures trading involves significant risk, so make sure you carefully review all of the rules before purchasing any evaluation. Apex Trader Funding is an evaluation company designed for futures traders. Instead of immediately trading with a large amount of your own capital, traders can purchase an evaluation account and demonstrate their ability to reach a profit target while staying within specific risk management limits. If you successfully pass the evaluation, you may move on to a performance account, commonly referred to as a PA. There is one important point I want to clarify from the beginning. According to Apex's current documentation, a performance account is a simulated funded account, so you shouldn't assume that passing the evaluation automatically means you're immediately given a live trading account containing the full account balance shown on the screen. This is an important detail to understand when comparing different prop firms. The basic process is fairly straightforward. Step 1. Create an Apex account. Step 2. Choose the evaluation type that best fits your trading style. Step 3. Choose your trading platform and account size. You then begin the evaluation and try to reach the profit target without exceeding the maximum drawdown or violating any of the rules associated with your account type. Under the current evaluation structure, the main account sizes include 25K, 50K, 100K, and 150K. Once you reach the target and satisfy the required rules, Apex reviews the account. After your evaluation is marked as passed, you have a limited period of time to complete the activation process for the corresponding performance account. So the overall process can be summarized like this. Choose Evaluation Trade Pass, activate PA. Meet payout rules, request payout. One of the most important choices on Apex today is between intraday trailing drawdown and end of day, or EOD drawdown. With an intraday evaluation, the trailing threshold can move based on your peak balance in real time, including unrealized gains. This means managing your open trades and protecting unrealized profits can be extremely important. With an EOD evaluation, on the other hand, the drawdown is calculated based on your end-of-day balance, rather than continuously trailing in the same way as the intraday model. EOD accounts also have their own daily loss limit. For example, under the current evaluation structure, the approximate profit targets are 25K account, $1,500, 50K account, $3,000, 100K account, $6,000, 150K account, $9,000. The corresponding maximum drawdowns are approximately $1,000, $2,000, $3,000, and $4,000. Don't focus only on seeing a 50K or 100K account size. The numbers that really matter are the profit target, drawdown, and how that drawdown is calculated. The current evaluation provides 30 calendar days to complete the challenge. 30 calendar days means weekends and holidays are included in that period. Another notable feature is that the current evaluation does not require a minimum number of trading days to pass. In theory, if you reach the profit target while following all of the rules, you may be able to complete the evaluation very quickly. However, I don't think that should be a reason to try to pass the challenge in a single day. When traders are focused on a deadline and a specific target, it's easy to start overtrading or using a larger position size than they normally would. The goal should be to pass the evaluation using a strategy that you could realistically continue using once you move to a PA. Rather than simply trying to pass the challenge as quickly as possible, contract limits also vary depending on the evaluation account size. Under the current structure, the 25K account allows up to 4 standard contracts. The 50K account allows up to 6. The 100K account allows up to 8. And the 150K account allows up to 12 standard contracts. Micro contracts are also supported according to the corresponding limits. One trader-friendly feature is that if an order exceeds the maximum allowable exposure during an evaluation, the system may reject the order instead of automatically treating it as a violation that causes the evaluation to fail. Even so, I would still recommend setting an appropriate position size in advance instead of relying on the system to prevent you from placing an oversized trade. When it comes to trading platforms, Apex currently supports options such as Rhythmic, Tradivate, and Wealth Charts, along with other connection solutions depending on your setup. Rhythmic may be more suitable for traders who want fast data connectivity and execution. Tradivate provides a simpler trading experience and supports multiple devices. Wealth Charts, meanwhile, focuses heavily on charting, scanners, indicators, and includes an integrated trade copier. One important thing to understand is that you cannot simply move an evaluation you've already purchased from one platform to another. So make sure you choose your platform carefully before making a payment. Once you pass the evaluation, the next step is the performance account. But this is the stage where you need to read the rules even more carefully, not less. PA accounts have their own rules regarding drawdown, position scaling, daily loss limits, inactivity, and payouts. For both current intraday and EOD performance accounts, Apex describes the PA as a simulated, funded account. You may also be able to manage multiple PAs, although Apex places a limit on the total number of active performance accounts a user can have. The important point I want to emphasize is that passing the evaluation does not mean all restrictions disappear. In fact, the PA stage is where risk management and consistency become especially important. Now let's talk about the part that almost every trader is interested in, payouts. Under the current PA structure, Apex states that approved payouts receive a 100% payout split, but don't just see 100% and ignore the rules underneath it. To become eligible for a payout, traders must satisfy requirements related to qualifying trading days, minimum daily profit, the safety net, minimum balance, and consistency. For example, a performance account currently requires at least 5 qualifying trading days before a payout request can be submitted. Apex also applies a 50% consistency requirement, meaning that one unusually profitable day cannot represent 50% or more of the total profit being considered for that payout period. The current minimum payout is $500. Another important point is that, under the newer performance account structure, each PA can receive a maximum of 6 approved payouts. After the 6th payout, that PA reaches the end of its payout cycle. This is something I think every trader should understand before purchasing an evaluation, especially if you're comparing Apex with another prop firm. So, what makes Apex interesting? First, the evaluation uses a one-step structure rather than requiring traders to pass multiple phases. Second, the current evaluation has no minimum trading day requirement to pass. Third, traders can choose between intraday and EOD models, giving them more flexibility in selecting a drawdown structure that better matches their trading style. Fourth, Apex supports multiple platforms and futures contracts. And finally, the newer payout structure, with a 100% approved payout split, is certainly an attention-grabbing feature. If you already have experience trading futures and understand how drawdown works, Apex provides several different options for building a setup that matches your trading style. However, Apex definitely isn't going to be suitable for everyone. First, trailing drawdown, especially intraday trailing drawdown, can be challenging if you frequently allow large unrealized profits to build up and then give a significant portion of those profits back to the market. Second, the PA rules are more complicated than the evaluation rules. You need to monitor consistency, the safety net, qualifying days, daily loss limits, and position scaling. Third, an evaluation only lasts for 30 calendar days. If you don't reach the target before the period ends, the account will expire. And finally, futures trading itself involves significant risk. Don't purchase an evaluation simply because you see an account labeled 50K or 100K and assume that's the amount of money you can freely lose. The most important numbers are still the maximum drawdown and your risk per trade. In my opinion, Apex is better suited to traders who already understand futures, know how to use stop losses, and have a clearly defined risk management system. If you're completely new to futures trading, I wouldn't recommend starting by trying to pass an evaluation as quickly as possible. First, understand contract sizes, tick values, drawdown rules, and the trading platform you're using. But if you already have a stable futures trading strategy and you're looking for an evaluation model to test your trading ability, Apex is certainly one option worth adding to your comparison list. To summarize, some of the most attractive aspects of Apex Trader Funding are its relatively straightforward evaluation model, multiple account options, support for several trading platforms, and its notable payout structure. However, you shouldn't make a decision based only on discounts or account size. Make sure you carefully read the rules for the specific evaluation you're considering and, even more importantly, the rules that apply to the performance account. If you'd like to check the current Apex Trader Funding account options and requirements yourself, I've included the link below the video. This is an affiliate link, which means I may receive a commission if you sign up through it at no additional cost to you. Thanks for watching. If you found this video helpful, don't forget to like and subscribe, and I'll continue reviewing more prop firms and trading platforms in future videos.